Hey, have you guys seen the headlines about foreclosure rates? Up 216%, up 185%. I saw one guy, the Valuetainment guy, put out a video that said foreclosure rates were up 700%. I don't see any data that supports that, but I've got a Forbes article here and I've got another article from where they got their article from that state foreclosure rates are up 219%. I've been saying all along, the only thing that could cause a real estate market crash is if foreclosures go through the roof. So if foreclosures are up 219%, was I wrong? Is real estate about to crash? Is this the end everyone has been predicting? Let's get into the data and the details, and let's talk about it, and let's get into it right now.
Shut up and sit down.
Okay, just in case you're new here, this is the Retire Mentality channel. This is a place where I want to change your mentality about retirement, about money, about investing, about real estate, about how you think about money, because what everybody else is saying out there is not what I'm saying over here on my channel. I'm doing things different. So if you want a different perspective, you want to look at it through a different lens, this is the place for you. I hope you'll stick around. Give me a big thumbs up if you like this video. Consider subscribing if you haven't done that. If you've been here before, you may notice I'm usually really close to the camera. And I'm in my Puerto Rico house today, so I've got more room to spread out. Maybe I'll zoom in a little bit, but I have everything that's important in Puerto Rico. I have my electronic tennis racket in case a mosquito comes here, I can bug zap them. I've got the remote control to the air conditioner, and I've got a cold medalla. If you've been to Puerto Rico, you know this might not look like a traditional medalla can. They got a fancy coral motif going on here. But enough about me in Puerto Rico. Let's talk about foreclosure data. Let's get into the numbers. This first article that I'm going to get into is from Forbes, and let's look at the data. Okay, the title of this Forbes article is Foreclosure Activity Increases Just Slightly in May, Signaling a Steady Climb Back to Normal. There's a key word there, a steady climb back to normal. So we're getting back to normal means before COVID, before the pandemic, before the recession. So foreclosure levels are starting to go back to where they were in 2019. I'm not going to read this article to you because I hate when people do YouTube videos where they just simply read articles to you, but I'm going to pull out some of the best quotes and information from this article. As normal, a link to the article down below. So if you want to go back and look at all the data in this article, you're welcome to do that and do your own research, which I always encourage because I'm just a YouTube guy, but I do like to take the data out of these articles and interpret it. So this article starts off and says, foreclosure filings were up 1% from a month ago, but up 185% from a year ago, according to a new report from Adam, a real estate data provider. Well, so this starts off pretty bad for the real estate market, up 1% from a month ago and up 185% from last year. But really, the point that I want to make with this video is that we're up from almost zero. Foreclosures were because of government intervention, because of mortgage moratoriums, because of foreclosure moratoriums, because of all these things over the pandemic and for the last 2 years or so, banks haven't been able to foreclose on anybody. So if your foreclosures are up, if you had one foreclosure last year and you have 3 foreclosures this year, you're up 300%. It sounds horrible to say you're up 300%, but 3 foreclosures is like almost nothing. And I think that's what a lot of this, that's what I'm going to prove with a lot of this data here today. Okay, this article goes in to talk about what states have the highest foreclosure levels and cities and markets. And I'm not going to get into that because I always say all real estate is local. I'm not going to get into local market data. I'm just going to talk on a broad spectrum today. Okay, so there's a quote in here from Rick Sharga. He is the Executive Vice President of Market Intelligence over at Adam. And what Rick says is, while there's some volatility in the monthly numbers, foreclosure activity overall is continuing its slow, steady climb back to normal after 2 years of government intervention led to historically low levels of defaults. So that's what I was saying. The government intervened, you couldn't do foreclosures, so they went to basically zero, so we're slowly, steadily climbing back to normal levels. But to be fair, Rick goes on to say, but with inflation now at a 41-year high and runaway prices on necessities like food and gasoline, we may see foreclosure activity ramp up a little faster than most forecasts suggest. Rick's probably smarter than me. He works for a data mining company in the real estate field, but I'm going to disagree with him here because what I've been saying for the past 3 years is that people have too much equity in their properties. They're not walking away from them like they did in 2008. The banks aren't lending the way they did in 2008, so people have more equity. So people aren't upside down. They don't owe more than what their house is worth. They just have too much equity, so people aren't walking away. So sure, like 10% inflation could cause some foreclosures, but it's not going to be many. And most people, because of the equity they have, will find ways to get out of their foreclosure, which is something else I've been saying, but the data is about to back me up. We'll get to that in a second. The article goes on to say lenders started the foreclosure process on 20,099 properties in May of 2022, which is down 1% from last month, but up 274% from a year ago. Then Sharga goes on. This is what I was just talking about. He says it's interesting that there were almost 10 times more foreclosure starts than foreclosure completions. This suggests that financially distressed borrowers may be finding ways to avoid losing their home to a foreclosure sale. This is what I'm saying. People have too much equity. They're refinancing their house. They're pulling out the equity. They're catching up what they're behind on their mortgages, getting out of foreclosure. Maybe they're putting their house on the market because the market is so tight right now and there's no inventory. People have so much inventory, they can put their house on the market and make a buttload of money and sell it and then go rent something until things cool down or they get a new job or they figure out why they got behind on their mortgage. So there's too many ways for people to avoid foreclosure. 10 times the number of people that start foreclosure, 10 times higher than the number of end up in foreclosure. So they might get behind, realize they're in trouble, and they're getting out of the foreclosures and they're not actually being foreclosed on. Okay, let's jump over to this other article. This is from prnewswire.com and it cites this Adam also. The title of the article, I'm going to take a swig of this. I'm getting a little parched here. The title of the article is Increased Foreclosure Activity in the First 6 Months of 2022 Approaches Pre-COVID Levels. Again, even though things are going up 200%, we're almost back to where they were in 2019. So it starts off, it says U.S. foreclosure starts up 219% in the first 6 months of 2022. 96% of major metro areas saw an annual increase in foreclosure filings. Foreclosure rates highest in Illinois, New Jersey, and Ohio. Okay, that's fine. So again, all real estate is local, but they're saying foreclosure starts up 219%. So there's a quote here. We're back to this Rick Sharga in this article also. And he says, while overall foreclosure activity is running significantly below historic levels, the dramatic increase in foreclosure starts suggests that we may be back to normal levels sometime in early 2023. So even though we're seeing foreclosures going up 219% from the previous year, it's going to take a whole nother year of slowly, steadily increasing foreclosures just to get back to where we were before the pandemic started. That's how low the levels are that we're at now. We're like way below average. So this 219% increase doesn't mean jack diddly when you compare it to what and then if you look back at the real estate market before the pandemic, it was just kind of going along. It was, it was going up steadily, but it wasn't a crazy market. It wasn't a down market. It wasn't a horrible market. There weren't lots of foreclosures. In any given time in the market, you just have a normal steady level of foreclosures because foreclosures are just part of life. It's what happens. So it's going to be a whole nother year before we get back to just the normal level of foreclosures. All right. The article goes on to say bank repossessions climb in the first half of 2022. Lenders foreclosed on a total of 20,750 U.S. properties in the first 6 months of 2022. And that number is up 30% from last half of 2021 and up 113% from the last half of 2020. So that's just, again, saying a slow, steady rise in foreclosures. If you look back at the Q2, the second quarter of 2022, foreclosure activity was below pre-recession averages in 79% of major markets. So foreclosure activity below pre-recession averages in 79% of the market. So all real estate is local, but it's not most of the places the numbers are still down. So I'm going to wrap this up for you. But before I do, if you got any value out of this video so far, give me a big thumbs up. If you disagree with me, that's fine. Give me a thumbs down. And if you if you haven't subscribed and you think I'm wrong, consider subscribing, because nothing feels better to look back a year ago and tell me that I was wrong and you were right. But so far I've been right for the past 3 years. But I digress. All this data about foreclosure activity just goes back to what I've been saying for 3 years, that the market is strong, the market is resilient. We're not people have too much equity. We're not back to normal foreclosure levels. So all these YouTubers and all these doomsday people who are out there saying foreclosures are up 219% and the world is ending, they're not being honest with you and they're not being truthful. I hope you can look at this data and be able to get the right information out of it. If you've been waiting to buy a house, I'm sorry to tell you, prices are going to continue to go up. We may plateau. They might dip a little bit in some markets, but there's not going to be a crash. Rates keep going up. So even if prices dip a little and rates go up, it's still going to cost you more to buy a house. So I hope people who have been waiting will finally wake up and see that it's better to buy real estate and wait than to wait to buy real estate. If you like this video and you want to see more about how I went broke in 2000, like I'm not impervious. I went broke in 2008 and then I went back and built up a real estate portfolio worth a couple $1 million. If you're interested in my personal story, you can go watch this video over here. And if you're interested in buying property in Puerto Rico, where I am right now, go watch this video. I've got some information on where you start to buy a house in Puerto Rico. Thanks for watching and I'll see you in the next video.